So, Kyle, the Hong Kong Monetary Authority says that you're wrong, that in fact the peg is going to stay. What is the Hong Kong Monetary Authority hiding from people?
I don't know if they're hiding, but I think, their mission is to promote stability and to try to maintain, this rigid financial agreement that's existed between Hong Kong, the Hong Kong dollar and the U.S. dollar for 36 years. I think I lay out the case for the fact that their economy has changed dramatically over the last decade. And in fact, what's happening now on the political front with China asserting a little bit more control over the Hong Kong judiciary, i.e. Taking away their autonomy by pushing through this fugitive extradition bill. All of those things are changing the nature of Hong Kong as a global financial center. And I think that investors need to be aware of these things because, by the way, the people that maintain the peg, the Hong Kong Monetary Authority, the peg's architects, they're never going to tell you that the peg is vulnerable, right? It's antithetical to their mission. I think it's very important as a global investor to think about where you're investing your capital. Is there a rule of law? Is there fee simple property ownership? Is your money safe? And to the extent that you have a communist authoritarian government infringing on your rights and potentially extraditing people at their will in order to promote some political agenda, I think that changes the complexion of the agreements the United States and Britain have with Hong Kong.
But that's the thing, right? Because there is the Hong Kong Monetary Authority, but in this case now, there's also the PBOC. And as Mark Chandler points out, why would Beijing kill the golden goose, the goose that's been laying a golden egg for the last 36 years? Most recently, when it did come under pressure, the Hong Kong dollar peg, Beijing or somebody intervened to defend it.
I think it's really important to understand that China had built up a war chest of FX reserves that, as you know, got to about $4 trillion. That has since come down to 3. And if you look at the outflow data, even though China is not admitting to it, we think that those numbers are closer to 2. And in an economy as large as theirs in RMB, you have to keep growing your reserve balance to interact with the rest of the world, right? China is desperately short energy, food, basic materials. They have to pay dollars for those things. So we all talk about China as being the world's great economic power and the engine of economic power. However, they're 15% of global GDP if you convert their current RMB-based GDP to dollars. But if you look at the SWIFT system, less than 1% of cross-border currency transactions actually settle in the Chinese currency. So there's this huge anomaly that exists where China actually is desperately short dollars. And then that moves into Hong Kong. And so China's house is on fire, and you're telling me that they're going to lend a few fire trucks to Hong Kong. The problem is the construct of the system and the cross-border currency flows in Asia.